Hello everyone, welcome to my YouTube channel. Today I want to discuss the current state of markets and how is it going to impact on the next week's market action. So as you remember, last week we had some critical news events like CPI data release, PPI data release, and a lot of political tensions in the Middle East. So the instability in the Middle East is really, shaking up the markets. And as of the time of the recording of this video, inherently there is a very big, drone strike from Iran happening, in the Middle East. So as you can see right now, the Bitcoin, Ethereum, all of, those crypto assets are right now going down heavily on this, tensions in the Middle East. So these ongoing, earnings, this tensions in the Middle East and all these, events are actually, causing the markets to be very, very volatile. So in this video, I'm going to discuss everything in detail, and let us start with the first section, that is the macroeconomic section. In terms of macroeconomy, it is really important to understand what happened last week and what was the reaction of the price. So as you may remember, Wednesday, we got the critical CPI data release, that is consumer price inflation data release, and it came in hotter than expected. So it came in at 3.5% year over year. Now 3.5% in the inflation data ratings is very, very hot and is very, very high. So apparently inflation right now is looking very stickier, and apparently the interest rates are not having a greater impact on bringing down the inflation to the speed at which everybody imagined. So that was one point. And then because of this, data release, markets went down on Wednesday. And then on Thursday, what happened is we got the PPI data release. And in the PPI data release, it was showing that, the inflation was not that, high, and it was at 2.4. So markets rallied heavily. So these kind of crazy volatile swings happens when you have such news important events and such data release events. So that is why I cover macroeconomic section and news section on this channel, because if you don't know about the timetable or the schedule of these events, then you may fall into the trap of heavy losses, because you got to know what to expect from the markets. So because of the softer PPI data, we rallied on Thursday again. And then on Friday, we actually, gone down like crazy because there was an ongoing, geopolitical tensions about the, situation in the Middle East. So what happened is earlier last week, we had Israel, bombing an embassy building of Iran in the capital city of Syria, which is called as Damascus. So in retaliation, in response, Iran issued a threat that, they will retaliate. And apparently today, as a time of the recording of this video, what is happening is they have launched a drone strike. So that is why the crypto assets like Bitcoin and Ethereum are falling heavily. So the ongoing escalations in the Middle East will cause markets to go down. So as long as these escalations don't turn into a full-blown war, and I really hope it doesn't, we will see a lot of crazy volatile swings in the market. So pay attention to all these geopolitical events. Make sure that you're not in a big position while these events occur, because it can go from north to south very easily. So this is the macroeconomic overview of what is happening in the markets and why the overnight cryptocurrencies are falling like crazy. So we will have more visibility when the futures trading opens on Sunday afternoon. At that time, we may see there is a very high possibility of seeing a huge gap down. So if you have overnight positions, please don't hold it. These are crazy volatile swings. Let's just hope that the escalations in the Middle East or the tensions in the Middle East comes down and there is some sort of deal. But as of now, the reality on the ground is very, very different. There is a lot of chance of full-blown war between Iran and Israel. According to my experience, this won't happen as a full-blown war, but as long as both of the sides use proxies, it's going to be bad. So embrace and prepare yourself for a market fall. I still think that 8 to 10% of correction is very, very healthy for the markets, and that would be a very good buying opportunity. So I will discuss the important levels in further section of this video, but this is the whole background picture of what is happening on a broad basis in the financial markets and in the world. Now, let us jump on to the weekly time frame analysis. Talking about the weekly charts, let us discuss the support levels, the resistance levels, and some key miscellaneous points. So let me go to the chart and show you guys what I mean over here. So this is the weekly charts. All of these candles corresponds to one single week. Now, one key observation that I did on the weekly charts is this is the second consecutive week that we closed below the 5-day moving average. So 5-day moving average is the testament of the shortest term sentiment. So if we close below 5-day moving average, and that too on a consecutive week basis, then that is indicative of the lot of selling pressure. So talking about the support, this green zone that you can see over here, which also corresponds to the year-to-date anchored VWAP, is going to act as a really strong support zone. And why do I say this? It is because this is where previously we took support over here for 2 weeks. We also spent a lot of time over here and a lot of POCs, that is point of control, in terms of volume of 1, 2, and almost third candle. This corresponds to a very good support zone. So if we go down next week, let's say Monday and Tuesday, then this zone is going to act as a very nice support. So keep a close eye on this zone, and this corresponds to 17,850 levels. So that is where the real support is on the weekly time frame. Now on the resistance side, 18,500 and 18,600 still continues to be a strong zone of resistance. So that is my analysis on the weekly time frame. One important key takeaway is we have rising volume when we are going down. So we are going down since last 3 weeks, and that too with higher volume. So there is a lot of selling pressure also in terms of volume. So that is a key thing to note. This concludes the weekly time frame analysis, and now let us go to the daily time frame analysis. Talking about the daily time frame, this is such a roller coaster, and I haven't seen such a volatile week, and that too with insane moves in such a long time. So in the daily time frame, I want to discuss the price action using the candlesticks, and I also want to discuss the reason behind those candles. So let me go to the chart, and of course I'm going to show you the support and resistance levels. So this is the daily chart, and as you can see, on Monday and Tuesday we were very silent, a lot of sideways action, nothing special. On Wednesday, this was the CPI data release. We really went down on the red hot CPI inflation, and you can see in the price action as well. Then we had a PPI data release, and that was softer than expected, 2.4% only, and as you can see in the price, we rallied crazy. So, and then on Friday we had this huge rally, and then we had the exact opposite, or the reversal, with huge volumes on Friday. Now that was because of the fundamental reasons of the tensions in the Middle East. So in one given week, look at the volatility and look at the barcoding. So this is where the understanding of technicals as well as fundamentals as well as macro is essential for a trader to understand the price action and see what is going on. So in the last week's video, I discussed this range, that is the top of the range and the bottom of the range, and look how beautifully it holded that range. So this is the box that I drawed last week, and I showed you in this video, and I told you that for any bearish sentiment or for any move downwards, the first thing that markets need to do is eliminate the nearest low. So what was the nearest low? It was this one. So this thing got holded even in pre-market when the data released. So this was, since this was getting holded, I was really bullish. But as we closed this week, and that too very near to the lows of the prior week, now the $1 million question is, what is going to happen next week? Now, as we know that the tensions in the Middle East are escalating, that is one macro point. The second thing is, in the price action, we are not seeing as of now the elimination of the previous low. Until and unless this previous low gets destroyed, then and only then we can be bearish. So what is the level of support that I am looking for if the markets go down? So if the markets go down, the first level of support is going to be this 50-day moving average. That is the yellow line, or the dark, amber line that you see over here. The S1, that is the support on the pivot level, also will act as a really nice support. But in my humble opinion, the ultimate support will be the lower end of the Bollinger Band. So if you see over here, what is the meaning of Bollinger Band and why do we use it? We use it to determine what is the range of the market. what are the markets contracting or are the markets expanding? So the range over here, you can see both the top and the bottom are opening up. What does that mean? That means there is an increase in volatility in the daily time frame. So if there is an increase in volatility, then the stopping point or the support point will be the end of the Bollinger Band, that is this one. So the lower end of the Bollinger Band will act as an ultimate area of support in the near term. So if the markets go down on Monday and Tuesday, then keep a close eye on this Bollinger Band, that is the lower end of the Bollinger Band. And the settings that I use for the lower end of the Bollinger Band is 3 standard deviations as opposed to 2. So you will have 2 standard deviations by default in your trading chart platform. I normally like to use 3. So this is why my Bollinger Band is sitting over here. So that's my analysis on the daily time frame. One key thing to observe is we are very near to get a bearish crossover. So what do I mean by when I say bearish crossover? The short-term sentiment, that is 5-day EMA, when it crosses below the long-term sentiment, that is 26-day EMA from the top, that is what is called as bearish crossover. So let's say on Monday and Tuesday we close below these 26-day EMA, then that is going to be a confirmation of a bearish trend. So keep a close eye on those levels. The first thing is this zone, and the second thing is the lower end of the Bollinger Band. So if that happens, then only then we can be bearish. And if it doesn't hold, so let's say this zone, this doesn't get destroyed or this doesn't get violated, then there is no reason to get bearish. So keep a close eye on these levels. There is a very high chance that we test the lows and we go down next week, but we'll have to watch. Until and unless the charts tell you, or until and unless this ranges gets confirmed, do not form your opinion, because next week it's going to be very volatile and there are very lot of chances that your stop losses will get triggered. So be very careful going on to the next week. But as of now, what the daily time frame tells you is we are due for a 5 to 8% pullback. So the test of lower Bollinger Band would be an excellent buying opportunity. So the level that I'm talking about is 17,800 to 17,900. That is going to be the level for the futures, and that will also corresponds to the year-to-date anchored VWAP. So that's my take on the daily time frame. In terms of support, lower end of the Bollinger Band is going to act as a very good support, and in terms of resistance, almost 18,500 is going to be the level of resistance. Everything in between is noise. So don't form big opinions if the price remains in this chop zone. So that's the wisdom that I have accumulated over the years of experience. So that's my take on the daily time frame. So now let us discuss something about VIX, that is the Volatility Index. So this, I'm talking about VIX right now in this video is because since we are seeing elevated levels of volatility, we need to quantifiably measure like how much is the volatility in the relation to how it has been in the past, for us to understand if we have capitulated or if we are done with the correction or not. So let me explain you all of this in the charts. So if I go to my charts and if I go to the Volatility Index of S&P 500, then you can see that since last few months we did not have huge spikes in the volatility. So the last time the VIX spiked was February the 13th, that was the Nvidia earnings day. So you can see that it capped out at 1793, that is 18 levels. So since last few days we had VIX spiking up and the highest rating was around 19. So what I am looking for, or what is the actionable insight from this information that everybody can benefit from? So what I'm looking for is VIX going above 20 levels. If it stays above 20 levels, or if it touches 20 to 25 levels, then that would be the indication that the volatility has peaked, and then we can have an excellent buying opportunity. So keep a close eye on VIX levels. If it crosses 20 and if it goes from 20 to 25 anytime next week, then that would be an excellent time where the volatility will tap out, and then we can have some good shopping at those levels. So this VIX is basically basically a measure or a gauge of the fear in the markets. If the VIX taps out at 20 or 22, then that would be a quantifiable way in which we can conclude that the volatility has peaked. So as of now, it has not peaked. So what we are looking for, or what I am looking for, is the level in the VIX from 20 to 25. That would be an excellent point at which I will issue a video stating that now go ahead and buy. So now let us discuss about the anchored VWAP charts. And I want to discuss some important levels going forward as to know like how much deep would be this pullback or correction. So let me show you all of this in the anchored VWAP charts. So these are my anchored VWAP charts, and as you can see over here, I have plotted these anchored VWAPs to different points in the past which were significant in terms of market action. So as you can see, we are holding the FOMC January anchor that is mounted over here on the FOMC meeting, and this has holded very nicely since last so many days. So what is my point showing you this? My point showing you this chart is because let's say if the markets break down next week and if we have a good pullback, then what is the point where we will get interested in going long? So this is the point, that is the year-to-date anchored VWAP level, that is 17,800, and the January lows anchor level, that is 17,850. So this zone would be a very key battleground, and the buyers would be really interested in going long over here. So let us say if market goes down to any of these levels, that is year-to-date anchored VWAP, that is 17,800 levels, then that would be an excellent buying opportunity for this year. So that's my take from the anchored VWAP charts, and remember these kind of levels, 17,800 and 17,850 is going to be a very huge support in terms of anchored VWAP. So that's my take on how deep the correction it will be if the markets go south. So now let us discuss the economic calendar events that can be impactful to the markets. So next week, the week is going to be fairly stable in terms of the economic events or the major news data releases. So let me show you what I mean over here. So if you go to the economic calendar, so you will see that on Monday, we don't have a groundbreaking news, to be honest. So, it's fairly, straightforward. It's fairly, usual stuff like, a lot of Fed speakers speaking. And then on Tuesday, we have some, usual news, and not like market moving or not groundbreaking news. On Wednesday as well, we don't have big news except from the release of the Fed beige book. So the Fed beige book is going to be critical, so don't be in the position while that news is released. Apart from that, the main news for the next week is going to be Thursday, which is the jobless claims numbers. So those initial and continuing jobless claims are going to be crucial for the markets to know where the labor market is. So that's gonna be crucial. Apart from that, 5-year STIP auction, and then a lot of usual Fed speakers speaking. So economic calendar wise, next week is not going to be very groundbreaking. It's going to be fairly stable. The only systemic risk that we have in terms of news next week is how is the level of escalations, or what is the level of escalations in the Middle East, or the tensions in the Middle East. So that is going to dictate the narrative and the price action going into the next week. Finally, I would like to summarize the entire video by only 2 points. And those 2 points are: wait for the lower range that I showed in the daily charts to confirm if the markets wants to go down. If the markets go down, then what it needs to do is first eliminate the range that I showed in the daily time frame. So if it eliminates that range, then definitely you can expect the markets to go down heavily. Now, the second question is, if the markets go down, then where is it going to stop? And that's exactly why I showed you the year-to-date anchored VWAP at 17,800 levels. So 17,800 levels is going to be very crucial, and it is going to act as a very good support moving forward. So that is the summary all in all, with the exact levels, so that you can be well informed and can take the advantage of these levels. So that's my take on the current market scenario, ranging from technicals to macro and ranging from fundamentals as well. So markets apparently are holding very nice. Any 8 to 10% correction or any 5 to 8% dip is going to be very, very good buying opportunity for the long term. So that's my take on the markets, and I want to thank you all for taking time to view this video. And please like, share and subscribe, and please feel free to explore the other contents on the channel so that you can learn and you can grow with me as well. So thanks, and leave a like, leave a comment. I would love to listen from your perspective as well. So keep learning, keep growing, and keep trading.